Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. As always, my colleagues Sonia and Mangalam with me. Guys, hi. Good
Hi,
morning.
morning.
2 days more. Every day we're counting down and it's getting closer. As we were just saying, I mean, thoda sa dhakka de dijiye. Do din all, right?
As it gets closer and closer to the new year, you realize that you are perhaps the only one working. And there's
At
no
least
one
three
watching.
of us here, Sonia.
There's no one watching, so you can do as you please. But no, I mean, it's the last 2 days of the year, and there's so much to kind of look back on, right? The good, the bad, the ugly. And yeah, I mean, it's been a great year so far.
Absolutely, and we look forward into 23 as always. But, let's just quickly run our viewers through just the broad lay of the land, right? So US markets were trading. And they were down once again. NASDAQ basically the problem point, but the S&P also was down 1.25% or so. It's largely lackluster. Oil is down. I mean, it's a curious kind of price action because you've got this China reopening theme playing out, but oil markets aren't responding. Metals actually are responding more. But it's a big one, and we'll talk more about this in terms of opinion, etc. But so far, oil is well behaved. It's up $10 or so in the last 10 sessions. But last night it didn't do very much. Yields also, I mean, exactly there, about 3 basis point change. So lastly, nothing. Nifty yesterday tested and then turned down from the June lows trend line. And this is what we'd exactly put out yesterday morning. It's an upward sloping trend line. So yesterday the level was 18,170. The market the Nifty broke above it and then turned down back below it. Today, that level on that trend line is 18,190. Right, so we closed at 18,122, not very far away. In a good push, and that should be there. But the point is, will supply come in? Will selling come in around those levels? In any case, I mean, if you're trading, this trend line has proved to be a good one, both on the way down and now as we attempt to retake it. On the way up, I mean, beyond 18,190. You've got 18,235. Again, as I said, very near term. This is within the next 100 points. That is the 50% retracement of the fall from the 14th of December high. So that is the other one. Supports for the Nifty come in at about 18,000. And we put this number out yesterday as well. It's nothing but a very short-term retracement. Yesterday's low was almost exactly at 18,000. I think it was about 17,994 or so. And then the market kind of bounced quite a bit. And then if 18,000 goes, you get 17,780 as the next support for the Nifty. For banks, it's coming up nicely. Again, the banks did a little more, were a little better as compared to the Nifty, almost similar. PSU banks, though, and we'll talk more about this, all sold off in the last 30 minutes. Resistance for the bank Nifty comes in at 43,165. Which, by the way, is the level where both the 50% retracement of the fall and the 20-day moving average coincide. Actually, it's 43,165, 43,166, the two numbers. So it's coinciding. So that's a very near-term kind of resistance the Bank Nifty's got to take out. And supports for the Bank Nifty come in at about 42,400. We had very strong days on Monday and Tuesday. A little bit of a pause yesterday. And I wouldn't mind if we have a bit more of a pause today as well. We kind of go through. You don't want to do something wild at the end of the year. It seems like good as an idea, but more quiet, normal kind of session, and then kind of take stock as we enter the new year. I think that's the way to go. The SGX is indicating a 70-80 odd point lower start, almost exactly like what we were seeing on the screen yesterday. But I think with the days we've had earlier this week, some confidence has returned once again. At least the very bad memories of last Thursday and Friday when the bottom kind of fell out, that is a little bit in the past. Not completely erased, but I think this week has done good. So 80-point lower start on the SGX. Sonia, hi. Mangalam, hi.
Hi, morning. So, there's this phrase, right? It's called coasting at work, when you just kind of do the bare minimum and, you don't stretch yourself, you don't go above and beyond, just basic. That's what you're seeing in the market as well. The market is just sort of coasting.
I thought this was like a personal admission or something. I don't know where it was going.
So I guess if traders...
Was it December specific or is it like throughout the year just coasting?
Well, we'll discuss that at the other side of the camera, right? But For now, I mean, for the market as well, I think it's, traders, whoever, are still working, they're perhaps just using this time to just consolidate in the market. There was 2 days of a good pullback, and then the market chose to consolidate at this pivot of 18,000. Just a couple of things that I'm watching out for. There are still recession fears across the globe, and that perhaps could weigh on sentiment. The Dow was down quite a bit yesterday. A lot of technology stocks, big tech in the US has been under pressure. Apple hit a fresh 52-week low on the iPhone supply concerns, as well as Tesla, we told you, is down quite a bit from November of 2021. Tesla's down about 70%. So a lot of these big tech stocks are now under pressure in the US, so keep an eye out on that. In terms of data, I'm watching out for the US weekly jobless claims that are expected to rise to 223,000 from 216,000. So that's an important internal to track. The flows are quite muted towards the end of the year, so not too much. There is buying from DIIs and selling from FIs yet again, but FIs have not sold as much, just about 870 odd crores. So in a sense, the Nifty is largely range bound between that 17,500 to 18,200 level, and this 50-day moving average of 18,235 is the level that's proving to be a bit of a resistance on the upside. Let's see if that gets taken out. For now, it doesn't look like there's any major trigger to get it above that, because the SGX Nifty is also indicating a start in the red. And there is a listing today, KFin Technology, so we'll talk more about that later. But in terms of cues, largely cues are skewed to the downside with global markets under pressure. So let's see which way it goes.
Let's see which way it goes. It's also the December series expiry. And, it's been a long series, the longest this year, because it started on November 25th. And we have the expiry today. Point to point, the Nifty is down 362 points in the December series so far. But it masks the volatility that we saw. On December 1st, we saw the all-time high of the Nifty at 18,887. And last Friday itself, when we thought, the bottom was falling out, the low was made, 17,774. So 1,100 points is the sort of movement that we saw through this series itself. But the last few trading sessions, the Nifty has tried not to bash into the walls too much, just go through the days. That's what's happened. And the FIIs, because there has not been too much, support on the downside, they've covered their short positions. They've, unwound short positions, and their long exposure now is at 48%. Add to that, they've also written around 11,900 put contracts. So lower levels are protected. That's what the expectation is. Because in just the last 3 trading sessions, the FIs have actually covered 51,000 short calls and added 1.6 lakh puts in the expiry week itself. For today, it is likely to be no different from yesterday. The SGX Nifty indicates a dip, and that dip gets bought into. We've seen a lot of writing at the 18,200 call for a premium of 20 rupees that ties in with the resistance of 50-day moving average that Sonia alluded to as well. But the 18,100 put is something that I'm looking at, because that's added about 30 lakh shares in open interest for a premium of 40 rupees. And that tells you that 18,050 to 18,060, right in the zone where the SGX Nifty is indicating an opening, could be a bit of a support. So that's something that we'll be watching out for. And those are important levels. On the way up for the Nifty Bank, the 20-day moving average is proving to be a bit of a headwind as well. So do we cross that or not is the big question.
Okay, well, for now, the SGX Nifty is under quite a bit of pressure. So before we start, let's tell you what all is lined up in the first half of the show today. We'll get you updates from markets across the globe. Cameron Brand of EPFR Global will be with us to discuss global flows picture. Later, our research team will bring you CNBC-TV18's list of top stocks for the day. At around 8:30 a.m., we'll do a fundamental stock analysis with Devin Choksi of KR Choksi, and then Momentumizers will follow next to decode a rally in the stock.
All right, let's get you some money market views. Parul Mittal of Standard Chartered Bank says the dollar INR has been range-bound in the last week amid low market liquidity. The dollar weakness and sharp rise in oil prices. She expects the dollar INR pair to trade in a range of between 82.5 to 83 to a dollar next week. She says the moves in the dollar and oil prices should be watched for cues. She expects the rupee to continue to underperform global peers in 2023 on continued elevated trade deficit.
All right, and on the bonds, Parul says that domestic yields have traded range-bound with an upward bias amidst low market liquidity and sharp rise in global yields. She expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.4% next week. She also says the focus will be on the announcement of Q4 FY23 borrowing calendars for state development loans and for treasury bills.
Right, let's talk about a lot of stocks then that we're watching out for. Obviously, we'll explain all of that to you in just a bit in our special top 10 segment. But the stocks that we're looking at, Spandana Spurti Financial Poonawalla FinCorp, Ashoka Buildcon, Tata Power, JSW Energy, PTC India Financial, Coromandel International, and NACL Industries, along with Bharti Airtel stocks on the radar on the back of positive news flow, and ONGC, that's the only one on our radar, which is likely to open in the red.
Okay, Cameron Brandt is now joining us, the master of flows, right? Global institutional flows. He's director of research at EPFR Global. Cameron, great to have you with us here. Thank you very much. Appreciate you, joining us. So, what's the latest picture from EPFR showing? I mean, the data would have come out for last week. What is it showing?
It is showing considerable uncertainty about where we're going on a broad front, certainly into the first quarter of next year. We obviously seeing, as we nearly always do, a certain amount of sort of window dressing, tactical position, year-end positioning, which has actually been to India's benefit. Your stock market is one of the few that looks set to end the year with a net gain, and we've been seeing some money move to take advantage of that. In the emerging market space, we're continuing to see a willingness to look past the COVID turmoil in China to the rebound that people are hoping for. So strong flows there. But ironically, supply chain relocation stories also remain popular, and India is part of that, along with Vietnam, the Philippines, and Mexico.
So foreign portfolio investors returned to the Indian markets in the second half of the year, Cameron, with flows of over 95,000 crores that came in from FPIs. I wanted to understand from you what the situation could look like in the early part of 2023, particularly from FPIs into a market like India, not emerging markets on the whole, but particularly for India.
I think India will remain a popular one, but the popularity comes with a sting in the tail. One of the reasons that FIIs like India is it's a liquid market, and you can both get your money in and get it out. So I think that India remains on their radar screens, but given the general market conditions I'm expecting in the first quarter of the coming year, I think you're going to see money coming in, but also going out with fairly big swings until people get a somewhat firmer picture of where the US, European, and global economies are heading.
Do you have a sense, Cameron, of the quantum of flows that are likely to come in versus the quantum of flows that are likely to get out? Because you're speaking of wild swings, etc. I mean, just wanted to get a sense of the magnitude.
It's been fairly routine for us, certainly in the second half of this year, to see fund groups week to week have flows both in and out equivalent to 3, 4, even 5% of their assets under management, which, as you can imagine, can compound pretty quickly if the flows start to move in a single direction. In the emerging market space, there's still a sense that there's some catch-up to be done there. A lot of the money that could come off the table in that space has come off. So I think we will see some sort of testing of bottom. So more likely to see inflows, but of a very nervous kind that could rapidly reverse.
Cameron, there was a tweet yesterday same time, from Jeff Gundalch, who ran one of the largest bond funds in the US, who was pointing to some issues in bond market funds. I think he was talking about distressed debt. Anything you've noticed, Cameron? There's a Bloomberg story this morning which points to some dislocations, but of course it's all tied to the very sharp rise in the benchmark funds rate in the US. Are you seeing seeing this in flows?
So we're certainly seeing the enthusiasm for high yield debt that was extremely evident when the Fed was in easing mode shift to a very sort of defensive approach with outflows more often than inflows. I think that bond markets may be where we sort of see some of the more painful movements next year. And certainly, though I haven't really seen it in the flows yet, I do expect some more signs of stress. One of the things I've been keeping my eye on is the fact that, in a very broad sense, the major sources of demand for U.S. treasuries are all less reliable than they were. Obviously, the U.S. Treasury market has had a large price-insensitive buyer of last resort in the Fed for the past decade, but other major places that would buy treasuries on a large scale, the Social Security Trust Fund, the demographics are beginning to roll that over. Private pension funds are starting to pay out to their baby boomers here in growing amounts, and that will require the selling of assets to meet cash flow needs. China, in the past 2 decades, has been a big buyer of U.S. sovereign debt, and the politics of that are much less clear than they were. So I think that there are going to be some ructions in the fixed income markets. We're still seeing QT in the US, and the ECB has said it will start in March. So I would say you should actually be looking beyond just high yield debt.
All right, look beyond high yield debt. Got that. Cameron, pleasure speaking with you. Thanks a lot for joining us on CNBC-TV18, and wishing you and your team a very happy new year. Have a great 2023.
Thank you very much. You too.
All right, well, that's the word coming in on the flow situation. But let's do one thing. Let's take a quick break. On the other side, our team will be with us to help us with some stocks that you can watch out for today. Welcome back to Bazaar Morning Call. Well, our research team is here to give us a list of top 10 stocks as we head into the end of the year. It's the second last, the penultimate trading day of the year. Look at those big smiles there. I think getting ready for the weekend and the New Year festivities. So let me start with you, Abhishek. What are you looking at this morning? Spandana, Spurti and Poonawalla FinCorp, is it?
Well, MFI stress sale continues, and that is why I'm looking at Spandana Spurti. They have sold stress worth about 323 crore to an ARC, that is Asset Reconstruction Company. This is being done under the Swiss challenge method, and for this, they'll get about 95 crores into their balance sheet. So this is one of the best rates, given the fact that if you take a look at the past few days, this rate that Spandana has got is very good, given the fact that Jana Small Finance Bank has got about 2.5% from the stress sale that they did. Bandhan Bank got around 9% from the stress sale that they did. However, Spandana Spurti has got a return of 29.5% from the deal that they have undertaken. So it's a good deal for them. Coming on to Poonawalla FinCorp, Rising Sun Holdings Private Limited, one of the promoters, has been on purchasing spree, which is being seen in the data that is being disclosed on BSE. So Rising Sun Holdings has purchased about 0.43 crore shares at an average price of around 289 per share. So in last 3 trading sessions, they have purchased nearly about 125 crore rupees worth of shares from the open market. If you take a look, the trend is on your screen. So this has taken their stake from 61.48% to now more than 62%, a gain of about 0.55% in their overall stake in the company. Back to you.
That explains why Poonawalla FinCorp was buzzing around in trade today. And we also had some support coming in from a brokerage initiation on that counter. But Vivek, you've managed to pull out some stocks in the news at a time when there are very few.
Well, absolutely. So quite a few stocks on our radar, quite a few updates actually on earlier announced news reports. But, let's have a look at them. Ashoka Buildcon, company getting an order worth almost 755 crore. This is from the Madhya Pradesh Discom. Tata Power, some more order wins coming in as far as the renewable arm is concerned. Now, this is for, the customer is the Tata Power Delhi. North Delhi customer base, and this particular project of almost 255 megawatt hybrid power plant, this particular project will be executed in Karnataka. JSW Energy, some positive news flow coming in. The company has completed the acquisition of the Ind Bharat or the Utkal power plant. This is done by paying a little over 1,000 crore rupees. Analysts say this is quite a positive development as far as JSW Energy is concerned. And also keep an eye out for two lenders, PFC and REC. Expect some write back in provisions for both of these names. Lastly, PTC India Financial Services. Now the company, which actually had quite a bit of trouble going ahead and submitting its results, Q1, Q2 results, the company did not give it. But in the last couple of weeks, the company has managed to restructure the board. 3 new independent directors have come in. 4 of the earlier directors have gone out. And the company has also gone ahead and refuted all allegations in terms of misappropriation of funds. So keep an eye out for this name as well.
All right, thanks a lot for that. Well, there are some more stocks that are in the news this morning. Sonal has hunted some of them for us. Sonal, over to you.
Good morning, Sonia. Well, 2 stocks on my radar. Coromandel International, because there is an interesting piece of update there. The company has incorporated a wholly owned subsidiary and they are calling it Coromandel Technology Limited. And this company will be involved in designing, development and manufacture of unmanned aerial vehicles. So the company is into fertilizers and agrochemicals, but this one here will be manufacturing unmanned aerial vehicles. So this is an interesting development here. NACL, where they have commenced commercial production of the Greenfield project by a wholly owned subsidiary of the company. The first phase of the project with a capacity of 6,000 tons per annum has been commissioned. So this stock will be in focus as well.
All right, that drone news is interesting, right? Sonal, I think, we had conducted, Sonal, if you remember, that conversation with the management of I don't remember which company.
Fact. It was Fact. Yes.
And they told us, right, I mean, that for nano urea
yes.
and nano fertilizers, the way to kind of get these to crops is through drones. So, well, why not make them?
Yeah, in fact, even other companies like Dhanuka Agritech, they are also getting into drone manufacturing as well. So I think that's the way to go about it when it comes to agrochemicals and fertilizers.
All right. Well, let's move on. So thanks very much for that. Bharti is the other one which is in focus. Rima is here to tell us why. Rima, hi.
Hi, good morning. So there are reports and there are 2 triggers from the reports. So one of them is that according to officials who some of the newspapers have spoken to, Bharti Airtel is looking to list Airtel Payments Bank. Bharti Airtel has about a 70% stake in Airtel's payment bank, and that company is doing pretty well, that subsidiary. It's turned profitable, it's seeing a growth of healthy double digits, 50 million users. So that's trigger number 1. Secondly, on the tariff increase, if you remember, in the month of November, Bharti had discontinued the entry-level plan only in 2 circles, Haryana and Odisha. Earlier, the entry-level plan in those circles were 99 rupees. They made it 155 rupees. So it was a very steep increase of more than 50%. 2 months back, we said that the company is perhaps just testing waters. To which the company said that, the response to this price hike has been better than what they were anticipating. So they have seen lower churn. But they said that, we will wait till February to get more data in, and then we will take a call whether we want to extend it on a pan-India basis. So that is the other big update coming in from Bharti Airtel. But again, this is what officials, without naming them, have spoken to reports, and we're just paraphrasing them for you. We haven't officially, gotten in touch with Bharti Airtel or got a word from them. Back to you.
All right, thanks a lot, Rima, for that. Well, let's go across to Manisha Gupta now. She's tracking what's happening in the world of crude. Manisha, good morning. What's the latest there?
Well, second straight day of decline really coming in for the crude oil prices. And even as the markets were rejoicing, the opening up of China and expectation that China, being the largest importer and the second biggest consumer in the world for crude, could really drive the prices higher. But with the rising cases, now there are concerns about restrictions being triggered in the rest of the world. US has now said that the passengers from China will have to show negative virus tests. Italy also has started to test arrivals from China, and there are reports that the last 2 flights that have come in from China, half of those flights are COVID positive, and there are some restrictions that some of these European countries could be putting in as well. The markets will continue to watch on what the OPEC and allies do. We haven't spoken about that in a wide bit. And Algeria now says that they are setting a reference price for crude at $60 a barrel for 2023 up to 2025. Of course, it's going to be about Russia, which is curbing exports to countries, and from 1st of February, we'll see those production cuts as well coming in. So continues to be quite choppy. Looks like that we are going to be trading within that 78 to 85 offer range for the next 1 week as well.
Choppy for crude as well, Manisha. Thanks a lot for that. With that, we actually thank our entire team for standing by and giving us the entire list of stocks that you need to watch out for. In case you missed it, let's tell you all those stocks that we're watching out for today. Stocks with positive news flow are Spandana Spurti, Poonawalla FinCorp, we have Ashoka Buildcon, Tata Power, JSW Energy, PTC India Financial and Coromandel International, along with NACL Industries and Bharti Airtel. But stocks with negative news flow on account of the weakness in crude is ONGC.
Okay, well, let's take a quick commercial break here. Up next, we have Gurmeet Chadda joining us of Complete Circle Consultants. We'll get you some specific stock talk with him. We'll also connect with Ramani Dhati of Teamly Services. The last time she was on, she told us that tech hiring is facing a bit of a muted picture. What's happening now as we almost wrap up the third quarter, that conversation comes up as well. Stay with us.
Welcome back. You're watching us here on CNBC-TV18 Bazaar Morning Call. In case you just joined in, it is the SGX Nifty, which is indicating a sharp downtick at the open, but not something that was unheard of or unaware of because of the weakness that we saw in the global markets. Yesterday's dip on the SGX Nifty was bought into as well. So let's see whether today's gets bought into too. It is December series expiry. But that's about the index. A lot of individual stocks in focus. And to discuss that, we have who better than Gurmeet Chadda, who's the managing partner and CIO at Complete Circle. Gurmeet, good morning. Thank you so much for joining in. We spoke about Poonawalla FinCorp. The stock has been buzzing around for the last few trading sessions, and now promoters are backing it as well. One of the promoter entity has bought almost 43 crore shares. What do you make of this stock, and would you advise people to buy it?
So pretty constructive on it, Mangalam, and thanks for having me. So if you notice, since they bought over Magna FinCorp, so promoter and management change. Not only the portfolio has been growing granularly, their cost of borrowing has come down significantly. Their rating went up to AAA, so their cost of borrowing, if you see, is down from almost 9.5% to sub 7% now, 6.97. And that creates a significant difference because that's the reason if you see NBFCs have been under a bit of pressure because banks get an edge when deposit growth lags credit growth, and the difference is quite wide. You have industry level deposit growth at 10% and credit growth at 17-18%. And I think they're growing very well. They have a target of 50,000 crores by FY25. Then I think the housing finance business was sold almost more than 3 times net worth, which I think is a very, very good valuation considering that where the other housing finance companies are trading, they've been also been very flattish. And I think there's a good digital ecosystem being built. I've been interacting with some colleagues there. So it's part of our coverage list and perhaps one of the few NBFCs which will do well. Also, if you see on a valuation basis, let's say, if you take market overall at 18,000, there are 2-3 pockets which are still below 10-year average valuations for NBFCs on a price to book basis. So that's also one pocket which has been not participated as much as the banks have in this up move.
Okay. Good morning, Gurmeet. And, before anything, let me wish you a very happy new year in advance. Last 2 days of the year. This has been a good year for a lot of people, including yourself. So you've had, many new milestones. So congratulations, and hope you continue to achieve the success that you've always, looked forward to. I want to ask you a little bit about some of the brokerage moves that we're getting this morning. And one of them is coming in on IPCO Laboratories, where Motilal Oswal has written a note they met with the management and they talk about how the domestic formulations business is growing at a very fast pace. And there is outperformance in most categories, you know, whether it's pain, dermatology, urology. So they have a target price of 1,000 on IPCA. Within this space and on IPCA particularly, your thoughts?
Thanks, Sonia. Thanks. I mean, hope you all have a good 2023. And I think India has still done well, considering where, you know, the world has been this year.
Absolutely.
Yeah. So if you look at pharma as a pack, you know, as I was mentioning, there are three pockets which are below 10-year multiples. So one is NBFC, one is pharma, and IPCA has been relatively soft over some time and has not created enough health. You know, it's part of a coverage list, but we would like to see the January earnings before, you know, adding to it. What I like right now is something where there is absolute negativity, which is the CDMO and API space. This is a space we've been early since 2017-18. So my sense is that this pharma outsourcing opportunity is more long-term and structural. If you hear the management con call of even Divi's in Q2, where CDMO numbers contracted, they pointed out to a lot of projects being in phase 2, phase 3. There are about $20 to $23 billion of molecules which are likely to get off patent, and there's a lot of backward integration and utility upgradation and debottlenecking happening. Plus, it was a perfect storm. You know, the COVID base came off, and your solvent prices, logistics, RM prices went up. So, and CDMO is a high margin business. We look at that. We also look at hospitals. I think we like Apollo Hospitals. It's part of our coverage list. So we'll concentrate more there than right now on IPCA and some of the multinational farmers which are into branded generics as of now.
You know, I was very happy. Gurmeet, hi, morning. I think it was Alok on Twitter, Alok Jain of Weekend Investing on Twitter, who was asking Chat GPT best places to have Chola Bhatura in Delhi. And I was very happy to see you corrected him when you said it's not Haldiram, it is Nagpur.
I have backup plans now, Prashant, in case.
I love how Gurmeet has somehow become the brand ambassador of Chole Bhature on Twitter. I think you should, you know, have a little party for that, Gurmeet. Here, call all of us for some lovely Chole Bhature.
I have Chola Bhatura as a Twitter setting. You know, as soon as anybody mentions Chola Bhatura, it pops up on my screen. And
his idea of rebellion is having lassi with Chola Bhatura in the winters, as against having chai or some hot drink.
Is it, Gurmeet?
So we look forward to you guys hosting you, because I can parcel it, but you know the freshness would be compromised. So whenever you guys are ready, we can do a Chole Bhature meet. Investors you will have a record turnout. Trust me.
You know, we already have many invites. One is from Sanjeev Bhasin, where we have a chicken tikka invite in Delhi, and now we have Chole Bhature. Our producers also want to join in, by the way, so I'm going to bring them along as well. But yeah,
you know, I'll tell you, the Nagpal is a very famous Chola Bhatura outlet in Delhi, okay? It's in South Delhi. And in Bombay, somebody sent me a flyer saying that they've opened an outlet in Bombay. I said, well, unbelievable, it's not possible. So I immediately called up the outlet. I said, yeah, it's just opened last week, so you can come down. It's pick up only. And somewhere in Andheri, I think.
Did you try it?
I did not try it. I was smart. I called the original Nagpal in Delhi and I asked them if they have an outlet. They said, no, we don't have an outlet.
That's equity research 101. That is, Gurmeet.
Hamari koi branches nahi hai. That's
Hamari koi, exactly. So, Gurmeet, all right, let's come back to markets. Fertilizers, right, is another area which is jumping. I mean, look at names: RCF, FACT, NFL, GSFC, Deepak Fertilizer even, but that's a lot of chemicals as well, doing very well. Is there some sort of a tailwind here, or this is just kind of, you know, momentum-led moves which will fade out sooner than earlier?
I think latter, Prashant. If you see it's pre-budget expectations build up, government spending on rural economy, on agriculture. Also, mind you, this is the last year for full budget before elections in 2024. So I think it's more related to that. We have PI industries, which is not exactly fertilizer. It's crop protection and CDMO and agrochemicals, which fortunately has done very well in this market for us. The book remains at 12,000 crore plus. Their innovation rate is what what is good. If you see every quarter, they tend to commercialize one or two molecules, and that's what, see the number of patent filing they do. This business is a lot about innovation, which unfortunately a lot of people miss. So that's something which continues to be in our coverage, and we have Deepak in our coverage. We haven't added that yet to the portfolio.
Do you track Team Lease, and is that a stock that you like?
Sorry, there was an audio glitch.
Do you track Team Lease by any chance?
We track InfoEdge,
Okay.
Sonia, in our coverage, and Naukri obviously is one vertical which is the largest contributing vertical. And then you have, at one point of time it was a darling because it was a proxy play to the startup ecosystems, right? The way the companies were getting listed. It's corrected, from 5,000 plus levels to 4,000. So, but if you see there, the billings have been going up. Even the matrimonial vertical seems to be doing okay. The educational vertical is where I think there is scope, but they're ramping it up, and it's a play on. So that's something which is in our coverage. But I would, despite the price correction, valuations still, in my view, are a little high. So we would tend to still be, for the first quarter, at least for this year, we would still be more focused on banks and autos, where probably the earning momentum is more strong.
Okay, the reason I asked is because we have the management of Team Lease joining in, so just request you to listen into that conversation and give us your thoughts. There's a report by Kotak Securities where industry discussion suggests that IT sector staffing headcount in the second half of FY23 will continue to see a decline. In fact, when we had spoken to Team Lease after the second quarter, they had told us about that sudden slowdown in IT hiring and that open positions in the sector were down 40%. To discuss where things stand now, we are joined by Ramani Dhati, the CFO of Team Lease Services. Ramani, thanks a lot for joining in. Has it gotten worse since the last time we checked with you? I think you flagged off the fact that, hiring has slowed down quite a bit in IT. How is the situation on the ground now?
Same as what we have indicated in our last discussion, because Q3, typically for IT, there will be a hiring freeze during the month of December. But this time, for the entire quarter, we have seen the hiring freeze. We haven't lost any headcount. There is no further drop in the headcount. But having said that, there are absolutely no new open positions for this entire quarter. And for next quarter also, at this point in time, we are not seeing any kind of improvement at this point in time. But maybe after Jan, once the new budgets for next year get rolled out by the corporates, we have to see how it works out.
You said during the second con call that open positions were down 40%, and now you're saying that there are no new open positions. Just wanted an updated number on that. And a lot of the e-commerce, logistics companies, etc., have said that festive season hasn't been up to their expectations. In fact, we heard that from a lot of the consumer discretionary companies as well. What are the job situations, hiring numbers out there in e-commerce and logistics?
No, absolutely. Because even when we look at our general staffing business, typically where we do the entry-level jobs, working with e-commerce companies, FMCG, FMCD, for us, Q3 is typically the highest contributing quarter in terms of headcount and growth. But this time we haven't seen that kind of surge in this quarter during the festive season. So the growth is similar to what we have seen in Q2. So to some extent, the festive season is a little disappointing for us as well in terms of the overall headcount addition.
Right. So is there a kind of clear slowdown in hiring by the organized sector? Or is that too much of a sweeping statement to make?
Yeah, it's kind of a sweeping statement because we are seeing good trends of hiring in some of the large industry verticals like banking, financial services, telecom, and also to some extent in FMCG, FMCD. E-commerce is one where this festive season is disappointing, e-commerce and retail, both of those. And also the startup industry, which has a 5-6% contribution to us. So that has completely went on a hiring freeze this time. And that being fueled by the overall hiring freeze in IT, that also has impacted us. Okay. But having said that, the rest of the other industries in general staffing, the hiring is continuing. Even the outlook for next quarter is looking bright.
Okay, well, there are a lot of these new terms, right? Boomerang employees. There's career cushioning where people are sort of looking out for jobs when they currently have a job. Boomerang employees, people coming back from all the startups that they were, getting into many years ago. So I guess maybe hiring has come back. But I wanted to ask you a little bit about the margins for your own business, because if you look at it, Kotak put out a note where they said that FY23 your margins could be lower than FY22. It could barely be 1.7%. Are you facing pressure operationally? And if yes, what could both FY23 and FY24 look like on the margin front?
Yeah. No, definitely we are expecting a lower margin FY23 compared to FY22. So it's mainly because of two reasons. So one is the overall salary inflation is very high and we don't have control on our associate salaries because it's driven by the market. And our realizations, our gross margins majority are fixed in nature. So while our realizations have fixed, the salary inflation is almost 12-13% this year. So that has diluted our margins. The second one is one of our major margin contributor is IT staffing. So that being completely slowed down over the last 2 quarters also has impacted our margins for this year.
So your earlier statement of 1.7 to 1.8% margins this year stands, or is there a downside risk to that?
At this point in time, 1.7, 1.8 looks reasonable. So we are targeting those kind of estimates for FY23. And we are on track to.
What happens to your growth projections that you had made at the start of the third quarter? I mean, you expected general staffing to grow about 20-25%. The first half you've grown 32%, but then with the largest quarter not doing very well for you, or as well as you expected, would you want to scale those down for the full year?
No, for the full year, we are still targeting 20-25% growth overall at the company level, as well as in general staffing business vertical. IT is the only sector where we are forecasting a flattish or a marginal dip, both in terms of revenue as well as profitability for this year. Otherwise, general staffing has been growing well.
Okay.
So last time we spoke, I think you'd said headcount in 23 should be 20-21% growth. And you'd told us that revenue growth should be about 30-odd% this year. Those numbers stay?
No, it would be around 25% revenue growth for this year overall, and headcount growth plus minus around 20% is what we are targeting in our staffing business.
Okay. And so that's a bit of we've spoken with you in the middle of November. So from 30% now for the full year with the Q3, almost the full Q3 behind us, you're saying revenue growth should be about 25, not 30%.
No, even that time also I have indicated between 25-30. So more or less will be in that range in our general staffing business. And also it's to some extent driven by inflation. If the salary inflation continues at the current rate for the next few months as well, then we may get, slightly higher than 25% as well. And also Q4, the pipeline for BFSI, telecom and FMCG are good. So if we can get to those numbers, then upwards of 25% revenue growth is still achievable in general staffing.
Okay, upwards of 25% growth is achievable in general staffing. Thanks a lot for joining in and giving us a quick take on the business as well as the way forward. Well, let's do one thing. Let's move on now. That was about TeamLease, but there's a new listing today. KFin Technologies listing takes place today. Surbhi, my colleague, is here to tell us what to expect from this one. Surbhi, over to you.
Hi, thanks for that. So KFin Technologies is making its debut on the stock exchanges today. The issue sizes for the IPO is 1,500 crores and it is an entirely an offer for sale. So no money is going to the company. The company is the largest investor solutions provider to the Indian mutual funds. It also provides services to asset managers such as mutual funds, AIF, wealth managers and corporate issuers. They hold around 59% market share. Now, they get revenue mainly as a percentage of their AUM, but they also get ancillary revenue based on transaction basis, fixed fees on the number of AMC branches they service, and fee for IT services. Now, 90% of their revenues come from domestic mutual fund and 10% from international and other investor solutions. For the first half of FY23, their average AUM for domestic mutual fund services was 12,30,000 crores and equity AUM market share of 35%. For the first half of FY23, they made a revenue of 350 crores with an EBITDA margin of 38% and a PAT of 86 crores.
When compared to their peers, they have only one listed peer, which is CAMS, and on that valuation on FY22, they are valued at 41.3 times FY22 PE, slightly more expensive than CAMS, which is at 39.4 times PE.
All right, Surabhi, thanks a lot for that. Gurmeet is still with us. Gurmeet, have you looked at KFIN? And I mean, it's an interesting way to play the rise in the domestic mutual fund industry, right? Especially given for the mutual fund industry itself, earnings have been reducing because of lower expense ratios, lower spreads, etc. So the best way to then play it would be through these companies?
So, we prefer CAMS, because CAMS has more than 2/3 the market share. Top 6 out of the top 10 AMCs are with CAMS. Even if you see their EBITDA growth, over, let's say, last 4 or 5 years, it's more upwards of 24-25%. And this is despite, as you rightly pointed out, the MF margins being under little pressure. So if you see the AMC growth, it's more in early double digits. So it's almost 2x of that as far as, the earnings go. Also, I think with insurance dematerialization on cards, I mean, gradually we are moving towards, digitization of records. And I think it's like a tech play on record keeping, let's say, within the financialization space. And look at the pace at which MF industry is growing. It's almost 40 lakh crores. I think remains a structural story. I remember when I used to work with Reliance, which is now Nippon, we celebrated 6 lakh crores in 2008-9. And I mean, just look at the way the industry is growing. So it's a very secular, and CAMS has been under a bit of it's been a little soft of late. So I prefer that because it's more a dominant player, in this space.
Right. Gurmeet, we spoke with the management of Canara Bank yesterday. Just wanted your thoughts on this. They said that in 3 weeks, they've collected 1 lakh crores in deposits after they hiked savings rate to 7%. Now, that sounded like a large number. It is a very large number. But how do you see this from different angles, right? I mean, one is incremental cost of these deposits is 7% now, right? It's much higher. So there's an impact on yield, NIMs, etc. But your thoughts from here out. But this also gives them the float to do lending. I mean, that was the question actually where this came from. But your sense.
So Prashant, you're right. I think you have to look at the right mix of CASA and deposits. If you're raising 1 lakh crores at 7.5% was the rate for senior citizens, right? It does impact your cost of funds. And also you have to see what is the mix of loan in terms of floating rate, right? So that's important. I think SBI still has an edge because if you see they have like 3.5 lakh crores of treasuries maturing next year, which is basically nothing but excess, SLR. And CASA is almost 48%. So I would prefer, I would still restrict myself to SBI and Bank of Baroda, but I think probably there is some more juice left as far as PSUs are concerned. Also, there is some space in the mid-cap banks which are showing good, healthy turnaround in the asset quality, something like an IDFC Personal. I think as I said earlier when we were discussing Poonawalla, focus will be on liabilities. People with lower cost of borrowing, higher mix of floating rate loans are the ones which will outperform. And it's easy to get carried away in this environment. High lending growth is a sure recipe to disaster if credit underwriting is not good.
Does this also show generally a scramble for deposits? Or no, you won't go that far?
There is a lot of liquidity, Prashant. Look at target maturity funds of mutual fund, which are like similar to fixed deposit. Okay, you can exactly predict the yield. That category has become 2 lakh crores in just 3-4 months. So there's a lot of liquidity, and because fixed income is now offering 7.5%, 8% yield, the cost of not doing anything is 7.5% today, right? So that's why I'm saying it's important now to research well, don't pay unreasonable. There is a lot of liquidity, on the sidelines. I can tell you that.
That the cost of not doing anything is 7.5% right now. Gurmeet, a lot more left to ask you. Just hang in there. We'll simply a short break and come back. But as we do that, let's also tell you what's lined up on the show for the next half an hour. We'll bring you the top stock picks for the day from our technical and FNO experts. At around 9 a.m., Anuj Singhal, as always, joins in for a quick trade setup before the market opens. And in CNBC-TV18 Stock Sports, we will highlight the top stocks to watch in focus for today's trading session.
Okay, welcome back. There's 9 minutes to go for the pre-open session. Let's get some technical sort of trading ideas as well. Sudarshan Sukhani, Mitesh Thakkar are with us. Gentlemen, good morning. Good to have both of you here. Sudarshan, how are things looking? Another quietish kind of day, which should not be too bad. or do you think we'll see some action today?
Yeah, good morning, Vishant. Yesterday, the idea was that markets could be choppy and we will not trade. And that turned out to be a sensible idea. Yesterday, we had a very narrow range. Now, a narrow range day usually leads to an expansion in one direction or the other. So today could be a day where we can see a trend developing, at least intraday. Now, given the fact that the US markets were down, Asia is not very cheerful, the trend could be on the downside. So for the day, I would suggest, that's what I plan to do, is to search for short positions. If the first 15 minutes of trading starts breaking on the downside, then keep a 75-point stop loss and look to go short. Remember, this is only an intraday trade for the Nifty, but today the view is to be on the short side of the market, just for the day.
So the trend is on the downside and the view just for the day is to be on the short side. Mitesh, good morning. Would you concur with that view, and what are the markers on the downside for you?
Yeah. Good morning. So, I've been saying that this up move for the last couple of days is more of a pullback kind of a move, and I think the maximum which I thought the index could do on the Nifty would be around 18,200 250 range. So I still maintain that view, though I think in case we get a gap down today, which is about 80-90 points as the SGX is indicating, and we see the intraday indicators turn down, then I think we will resume the downtrend and possibly look at least pre-testing the recent lows of 17,800.
How do you play this via stocks? I mean, are your stocks stock calls also on the short side, Mitesh?
Actually, Mangalam, good morning. I have a mix of buys and sells. On the selling side is LTTS or Larsen & Toubro Technology Services with a stop at 37.25 for a first target of 36.40. IDFC First Bank is a sell with a stop at 57 for targets of 53. Page Industries gave a good reversal and I think could see further moves or further pullbacks despite the fact that markets could be choppy. So this is a buy. Keep a stop below 44,400 and look for a 45,000 as the target. And the final stop call is on M&M, which is a buy with a stop at 12.34 for targets of 12.90.
Okay, and Sudarshan, how about you? What would be on your buy and sell list today? Considering that you're a bit cautious on the market, would you have more sells than buys?
I should have more sells than buys, although they are equal. Sonia, it's very difficult to go short, I have so bearish just before the new year. That's the only reason I have some buy calls, although the trend is still down. So Apollo Tires is a short, Apollo Hospital is a short sell, stop above 46.80. Crompton, which has been in a bear market of its own, is a short sell, stop above 346. I have two long ideas, mainly to keep the chair up. Indian Hotels is a buying opportunity. The stop is under 308. These buy ideas are not intraday. You really have to take a position in them. And Maruti could be a buying idea. That could also be an intraday buy. The stop under 82.85. But the thrust should be on looking short.
Mitesh, just a quick word. If you looked at the Ambuja Cement chart, it's again, this is all the way from the lows of March. Is basically back at that trend line support. It's basically above that. It broke below it briefly. So March 2022, then several around August of 2022, and now over the last couple of days, a break below this trend line and back above it once again. What would you do? Is this a selling candidate, or would you look to buy here?
So, Prashant, the overall structure is slightly on the negative side. Now, while, we did see a break of the trend line and then the market pulled back, so the stock came back into the trend line. But look at the low which the stock made on the 3rd of October, which was a closing low of around 488. And then we got a low of 490 on the 23rd of December. So this 485, 480 level has got multiple daily pivots and intraday pivots. I think eventually it will break below that. Once we get a negative signal on the intraday chart, I think this will be a selling candidate for me. And a target of 485 to begin with. But if it breaks below that, 440, 450 is the range which I think the stock will do.
All right, got that. Thanks, Sudarshan and Mitesh. We'll take a quick break. On the other side, we'll have the pre-opening rates. All indications are that the market will open in the red. Also, we will talk about the impending auto sales that come out on Sunday. Rishi Vora of Kotak Securities will join in. In fact, they've come out with a cautious report on the auto sector. More on that coming up in a bit. Stay tuned.